Okay, good morning, everybody. Welcome to Thursday, the 17th of February, 2022. We've had quite a bit of volatility on the oil book overnight after the close last night. The March contract expiring on WTI futures. So that's a H22 rolling to the J22. Now, this is a bit of a abnormal contract rollover given that the IEA is now trying to essentially bring the contango, the temporary contango and backwardation um, effect going on between Brent and WTI. They're trying to fix that essentially. So we're now going to be looking to trade 2 months ahead as the futures contract, front month futures, rather than just plus 1 month. That's what is coming across from what I've read about this change in the expiries that they've been pushing since January. So, but for now, we're moving to changing the J or to trading the J22 contract on oil. So you saw a lot of traders coming out of the H22 into the March last night. Um, Oh, as well, in volatility terms, we've had shelling in Ukraine. So really, gold is on the up from this, and so let's really get over and have a look at these charts. But just to cover the data for today, 1 o'clock. Not much out in Europe, so but 1 o'clock. 1:30 in the U.S. Building permits coming out. Tier 1 data 1.76 mil is the expectation, below prior 1.885. Looking at housing starts, but the big one really is initial jobless claims set to come out 219,000, below prior 223. All right, looking over at these charts, you can see we have the DAX up here, center left. It's trading back inside of this gap area. Nice shorts off the top, nice longs off the bottom. Really, 6 o'clock driving up, then through the 8 o'clock marker, reversal down, well, starting to reverse down, and we see that just all the time, and that kind of 7 to 8 sort of switch. But looking across at the Nasdaq, yeah, I mean, a bit of selling yesterday, to be honest, pre-market, and then really coming in 6:30, bid back up. So these markets really just seem like they're holding on to the bitter edge right now. Downside support 14,370s. You can see it was pretty much the low of trade yesterday, just before we opened in the US. So we seem to be holding in this upper register. So that makes me kind of hopeful that we should be looking at 14,810s, if not today. And with this increased risk in the Ukraine, I think really you have to err for the downside really on these equities. SPOOs as well, you can see quite clearly 8 a.m. driving down following the DAX, and holding below this little shelf that I'd identified yesterday. You can take that off now. It's not really helpful at the moment. The main resistance here 44.65 and quarter on the SPOOs. A little bit of a morning trend here that could be broken as well. So you could be looking out for a breakdown around the S1, get a pullback, get on the shorts, and then down we go for more of the lows. And on the Dow, yeah, resistant yesterday on the 20 EMA. You can see here just about 9 a.m. Down we go, testing in around this trend. I know some people were looking at the 34 700s, 720s for support, but really that's it. I do know the level there that is support on that. We can show it here now. It's actually on a weekly bar. So if I switch to a weekly on the Dow, you can see right here this kind of 34 684s kind of coming in there, right? So this one here, I'll make it a different color, just to make it a bit easier. This red one here, we'll make it a bit bigger. So you can see there yesterday, it's such a big old support, it's then you got to look at those things really like a line in the sand, as opposed to a hard line of support or resistance, the same way you might get like a prior day's open high low close level, which would be much kind of stricter resistance. So it's really just a barometer level. I think there's a lot of these weekly levels are sort of barometer levels, strong above, weak below sort of thing. That is the line in the sand. So ultimately we are supported within this compression pennant. There should be interest in trade to get back up here, but not if there is shelling in the Ukraine and potential war risk in Europe. So we are going to be weighed down with that in the markets. I've done a video this morning for the pro traders and the elite traders. Just have to update some of my drawings here to this new J22 contract, and we'll actually update this as well. Line in the sand, and just to accommodate for a couple of these areas and that we were looking at trading earlier. Um, I'll have to update my analysis on the weekly or on the daily. Let's just have a look at that as well. And here we're on the weekly bars, and we'll just do chart. Hold on a second. Just do chart. Update chart drawings, and we can just update here. There is a change of what looks like to be about 50 cents on these expiries right now between the March and the April contracts. So just going to have a look at that there. These really old levels. Yeah, 107 remains target upside for me. Yeah, so 72.07 is that major line in the sand that we're holding above really since the week of the 1st of this year, or the week of the 3rd of January. So eventually, I think we're holding really nice supports around here. 80, which is now 89.22s, near the lows of the week. I think good buying is down there. So if we go back down onto this new 60-minute chart here, that buying area is now represented at these lower prices, about 88.30s up to like 89.22s, right? So we'll leave that on, but you can see here this line showing the April expiry, or sorry, the start of the April contract and the expiry of the March, right? So yeah, I think generally really good supports down here. A lot of people thinking, hold on, what's going on? Why is oil selling down when we have increased risk in the Ukraine and da da da? Well, it's the March expiry, and for information on that, you're going to have to log into the Duggan Capital website, and they do have a sort of a thorough explanation of what's going on there, which is not your normal rollover procedure. All right, so gold, can't really look at much else apart from gold now on this increased risk scenario. So here is gold on the weekly bars. All right, generally I did a video on this a couple of weeks ago. Is it time for gold? Well, that was when we were trading down 1785s on the J22 contract for getting on up here. So we're about to hit 1900s. I would like to buy this on a pullback, and there is no way, not a chance in hell, am I buying this up at these elevated prices. Not for love or money. Your stop's going to have to be below 1884 spot fours and the R3 on the day, really. That's 83 spot fours. So, but generally, I think 19s is a target, and actually, best big boy swing target here is 1929s, and I just see a bit of fluff happening at 19s. But generally, there may at that point be a pullback opportunity to get in on the longs and angle for the 1929s. That trade is going to be reliant though on the risk sentiment remaining and expanding, getting bigger in the Ukraine, and that's just not something anyone can really forecast at this time. Nat gas as well. Something to note on Nat gas futures is not only do we have the inbuilt risk of the Ukrainian situation, but we also have a cold front moving into on the east coast. Is the east coast? Is hold on a second. I think let me see here. Actually, it's on the west coast. There's a cold front moving in on the west coast of America, and that's really pricing in on the nat gas futures right now. So quite a bid coming in overnight. I mean, we're down 1.5 now, but You know, I think there's a bit of that risk in there now. That risk should dissipate, similar to a hurricane risk on WTI. It should dissipate over the course of like 2 to 4 days. So I wouldn't be barreling in on the longs just because of that. But I do like the supports for spot 545s on this. Right, 4 spot 545s, and I'm gonna have to check on the expiry on the nat gas contract as well. Okay, my advice for today, really, well, I'm not here to give strict advice. This is really just what I would do, and I would really kind of sit back with a mind on the short side across equities, long side across commodities, and not be too fussed about having to trade. You know, I mean, I just not seeing huge opportunity jumping out anywhere at the moment, but that does change within a matter of minutes once we get some more volume in the markets. All right, listen, have a great session. Please do click to like and subscribe, and I'll talk to you soon. Cheers.